One major selling point for Bitcoin and most other cryptocurrencies is that it's a decentralized form of currency. Although Bitcoin was the first cryptocurrency to enter the market, as time progressed, other cryptocurrencies started coming out, and one of those alternatives to Bitcoin was XRP. Many believe that XRP is actually a better, more decentralized version of Bitcoin. But is this true? Is XRP more decentralized than Bitcoin? To get started, it would be good to answer the question, what is a decentralized network? A cryptocurrency on a decentralized network would mean that the cryptocurrency was designed in a way that no single individual or minority group can dictate rules or rewrite transaction history. That's the power of the blockchain. So, to answer the question, is XRP more decentralized than Bitcoin, let's look at how both cryptocurrencies work. Bitcoin rewards individuals known as miners for validating transactions by paying them a fee for their work. Anyone can become a miner and validate these transactions. At the outset, this might seem like a very decentralized way of handling transactions. However, XRP supporters argue that the more popular Bitcoin gets, the more decentralized it actually becomes. Why is this? Well, to make any changes to Bitcoin, 51% or more of the miners must all vote in agreement with a proposed change. And because anyone can become a miner, this means that large organizations, companies, or even governments could create large mining groups that control over 51% of Bitcoin's mining power. If ever one group has more than 51% control of Bitcoin's mining power, they could control how Bitcoin works and, as a worst case scenario, potentially even invalidate verified transactions and allow fraud to occur. As of right now, there are surprisingly only 4 mining groups that control 58% of Bitcoin. So how is XRP different? Ripple, the creators of XRP, basically said that they wanted to create a better version of Bitcoin. Their goal was to follow on from Bitcoin's foundation, but instead create a currency that was faster, cheaper, more decentralized, and even more environmentally friendly. But does XRP actually do this? Well, there are generally no arguments that XRP's transaction speed is incredibly fast. It can complete transactions in seconds, whereas with Bitcoin it can sometimes take over 10 minutes. XRP's transaction costs are also much cheaper compared to Bitcoin too. XRP's transaction costs are so low that they are often referred to as being almost free. And XRP is a lot more environmentally friendly than Bitcoin too. It's no secret that Elon Musk tweeted that they are no longer accepting Bitcoin due to environmental concerns. The CEO of Ripple, Brad Garlinghouse, was also quick to point out how Bitcoin harms the environment and how mining Bitcoins is increasing its carbon footprint and affecting the climate. He also went on to say how important this is considering how mainstream cryptocurrency has become with financial institutions like PayPal, Visa, and even Tesla. Since all the XRP in circulation has already been mined, it doesn't require a lot of power to keep it running. And compared to Bitcoin, only a relatively very small number of computer nodes are needed to verify transactions on the XRP ledger. So XRP is clearly faster, cheaper, and more environmentally friendly compared to Bitcoin, but we still haven't answered the biggest question. Is XRP more decentralized than Bitcoin? As mentioned earlier, Bitcoin requires 51% of the mining power to agree to make any changes, and it would be relatively easy for a company or government with a lot of money to take control of that 51%. On the other hand, since XRP cannot be mined, it instead uses validators on the network to validate transactions. The XRP ledger requires 80% of validators on the entire network over a 2-week period to continuously support a change before it is applied. And unlike Bitcoin, where one miner could have 51% of the hashing power, each XRP validator only has 1 vote. But doesn't Ripple own most of the validators? No, this is a common misconception. But from the approximately 150 XRP validators today, Ripple only runs 10, which would only be about 7% control over the XRP ledger. On top of that, the validators can also vote for who is known as a trusted validator. So if, for example, 80% of the validators on the network believe that it would be better for Ripple not to be a trusted validator, they could theoretically remove Ripple from validating transactions. In other words, Ripple would lose even more control over XRP. From the information you've seen so far, it might sound like XRP is a lot more decentralized than Bitcoin, but there's still one big problem. Since Ripple created XRP, they currently own a large chunk of the XRP in circulation. This is actually one of the reasons the SEC is suing Ripple. The SEC believes that Ripple in reality created an asset rather than a currency. However, XRP supporters argue that Ripple owning a lot of XRP isn't a problem, because they say that they use the sales of XRP to further support and invest back into the XRP ecosystem, and that it's still a better decentralized system compared to Bitcoin. However, on the other hand, supporters of Bitcoin say it's dangerous to have one company own so much of the cryptocurrency it created. But what do you think? From the information you've seen so far, what do you think is a more decentralized cryptocurrency, XRP or Bitcoin? Or is there another cryptocurrency even better than both? Let us know in the comments below. And as always, thanks for watching.